Hello, welcome once again. This is Si-Win Yi from the Yi Real Estate Network. And for almost 20 years, we have been helping out-of-state turnkey mom and pop real estate investors to buy cash flow properties off markets in 7 different regions in the US. Right? So our real estate investment club are physically based out of here in San Francisco Bay Area. However, we accept free membership of investors. Although most of our investors come from California, we welcome investor members from other part of the country, whether you live in Montana or Michigan or Vermont or Iowa or Washington State, wherever you're located, you have the ability to buy remote turnkey passive properties, 1 to 4 units, single family home, residential investing, duplex, triplex, and fourplex. And we have each market that we represent. We have turnkey umbrella service, whereby we will have property management do all the work for you over time, and our local teams in different market will take care of your investments for the long term, everything. Okay, so without further ado, let me share my screen. And today I'm going to talk about one of our market in Buffalo, Niagara Falls. So again, this market is part of a blue collar Midwest type of a market where the goal is to promote high cash flows, even a little bit of appreciation. As we all know, every market in the country, ever since the pandemic, there's a record shortage of supply of homes to buy. And then there are very huge demands. So I'm not going to go over what's going on, but I'm going to just highlight this one property that's available at this moment. By the way, these type of properties, we have every month, we have new listings that come on this kind of available investment opportunities. Is turnkey properties coming from this organization, this turnkey provider is off market. That means you do not have to go through the crazy bidding war, multiple offers, whatever scenario, which is crazy, insane. The price is the price. This kind of property, even though it's very, very old, 80 to 100 years old, has been properly rehabbed, is turnkey. Everything has been replaced. The roof, the boiler, the electrical system, the foundations, cosmetic, everything has been done. More often than not, a lot of these properties are pre-leased. We have month-to-month lease. And this turnkey provider in the local market here in Buffalo, Niagara Falls, they've been doing this business for more than 30 years. It's a multi-generational company. This is what they do, okay? They buy all the stressed properties in their market at the best possible locations, and then they rehab it with their own contract team. They have their own rehab team. Everything's in-house, property management as well, one-stop shop, everything, all right? This is a very remote passive investment methodology, and they have investors from all over the country that has been consistently buying through this organization, this turnkey provider, for many, many years. So they are very reputable, very great track record. We have sent them many, many, many investors to buy in this market. Now, let me qualify by saying, look, you must understand this is a blue collar market where, because it is an older property, even though it has been rehabbed properly, you will see, a number of minor maintenance issues and what have you. And the tenant, blue collar, right, C to C minus type of tenants and neighborhood. But again, a little bit more stressful than normal, than other newer properties that we sell in other markets. But hey, where can you get a triplex? As in this case, this is one of is available. It will be gone shortly. So every month we have several of this type of properties. We have single family homes, duplex, triplex, and even fourplex. Built 80 to 100 years ago, but it has good foundation. It's been rehabbed properly. It's turnkey. It's the tenant already in place. So, all right. So we have the numbers I'm going to share with you is very, very it's very transparent. Okay, the numbers are, in our estimation, is very realistic. But then again, this is a disclaimer. I mean, these are just projections. No one can predict the future. But anyway, so this kind of this month highlight is this triplex located in Niagara Falls, and the selling price, as you can see here, is $102,000. This 3 doors triplex, right? 102.5 selling price. As an investor, you need 25% down payment minimum per the Fannie Mae lending guideline. 25% multiplied by the non-negotiable purchase price is 102, and your down payment total, including closing costs, is a mere 30 grand, 30,625. So I ask you, if you have 30 grand sitting somewhere, what are your options? Put it on your savings account or put it under your mattress, earning you less than 1% interest rate, or you could put it in mutual funds. It's 30 grand, earn you 4 to 6% in the stock market, mutual funds, or you're going to leverage through real estate, where this 30 grand will allow you to buy an asset worth 102,000, income producing asset that will give you multiple ways to make money. This is a multi-dimensional asset class, right? Why? Because you're getting passive income, monthly high cash flow. You even getting appreciation potential, albeit not that high, 2-3% projection, whatever. And you're getting principal pay down by the tenant. Your tenant gonna make you wealthy, right? They're gonna pay all their rent for you to cover all your debt obligations, right? And you got a fixed rate, 30-year mortgage, even at 4.2% projection, is still a historical low interest rate. All right, so there you go, right? And then of course, the expectation is the rent gonna increase along with inflation, 2, 3, 4% inflation rate over time. You can increase your rent so you can have more cash flow down the road. You can have appreciation potential down the road. So not only I'm showing you the first year return cash flow analysis, but you have to look at the totality, the total return, the back end return by holding this property long term. So without further ado, let's go over the numbers. All right. So your gross rent is $1,525 in all 3 doors. So a little bit more than $500 per door per gross rent, minus a vacancy loss of a couple % equals your operating income, minus a very low monthly debt obligations, a mere $70 property taxes, only $45 of insurance monthly, 10% of the rent management fee, property management fee, $149 per month. And then I factor in $100 per month of utility maintenance because it's an old property, right? $170 of the rent, which is, I projected 7% maintenance percentage. So this is a very realistic 7% of the annual gross rent, which is, the annual gross rent is how much? What is it? 1,500 multiplied by 12 equals over here, 16,800, 300. Oh, I can't see. So your annual gross rent estimation is 18,300 multiplied by 7%. So the estimation of your maintenance, cosmetic repairs, changing the carpet, whatever is around, as you can see right here, $1,281. So all these numbers are very realistic. Again, it's just a projection, okay? The actual results are different from month to month, year to year. But all right, then as we look at the projection down here in the upper right-hand corner, I'm not going to spend too much time, but the rent to value normally 0.007% of the gross rent or 1% of the purchase price is the benchmark for rent to value ratio in this case, because this is a high cash flow business model. You're getting a 1.5% rent to value ratio, which is way above the 1% rule. So there's a win. And the capitalization rate, I'm not going to go over that, which is anytime you have a cap rate of more than 5%, is a very, very favorable attractive rate formula, right? Capitalization rate. Anything over double digit is just you're going to getting very, very high cash flow. All right. Cash on cash return at 27%. That means, in about 4 years, the cash flow you're going to receive will pay off your down payment. Down the road, beyond 4 years, is free and clear in terms of your recoup your down payment money, and then you can live off the rent and the appreciation potential to achieve very high. And this is the biggest number you can see is 41. The end of the first year, you're going to return a total ROI of 41%. This is the real return. Okay, for out of the first 12 months, 41% is the most important metric, especially at the end of the first year, because you're getting, your $1,550 of monthly gross rent from the 3 doors minus your monthly debt obligations. For the month, you can achieve positive cash flow monthly of a whopping $682, right, per month. That's a very good cash flow monthly. Multiplied by 12 months, you have an annual net cash flow of $81.94 plus at 3% appreciation, which is pretty realistic. 3% multiplied by the purchase price of 102. So that means at the end of the first year, you already have like $3,000 appreciation, or even more. Right here, $3,000 plus your annual net cash flow at the end of the first year, plus your principal reduction. The tenant gonna pay off, gonna reduce your principal balance by $1,285. So there's another profit scenario, okay? And then when you combine the annual net cash flow and then appreciate of $81.94 and the principal reduction $1,285, at the end of first year, appreciation equity gain $3,075 equals your gross equity income $12,554 divided by your down payment of $30,000 equals 41% return on your investment at the first year. Now tell me, on historical basis, can a stock market able to achieve this? Never has, never will. You're leveraging your money by putting a 1/4% down to buy this full income producing multi-dimensional asset, right? And the other assumptions that we just made, as you can see, 3% appreciation, 2% vacancy rate, 10% property management, and then maintenance out of your pocket at 7%, which is very realistic. All right. So, and of course, your loan financing scenario, 25% down. This is your loan balance, and this is your month projected interest rate. We don't know exactly. I put down a very conservative 4.3%. 30-year fixed rate, Fannie Mae lending guideline, still a very historical rate. So at the end of the day, you have an income producing asset that will produce very high cash flow. If you can buy more than one of these or multiple, we have investors that purchase many of these at a time per investor. You can buy with 25% down payment. You can buy with all pure cash. You can buy with your self-directed IRA for the amount of the purchase price. So multiple ways you could use your resources to leverage to buy this income producing high production asset. This triplex, very rare, right? All right, so that's it. That is my conclusion. So the recap is not very often anywhere where you can buy a turnkey off market, not in the general public. You don't have to bid with other investors out there. By being part of our member, you have access to this great inventory, so you can buy one or more of these over time, and then buy in other markets, diversify your portfolio, buy some single family home, brand new in our other markets in, North Carolina, Texas, and Florida, in Alabama. Then you have a very good diversified portfolio of single family homes, duplex, triplex, and fourplex. Buy it on a systematic basis, and before you know it, your financial security is set down the road years later to achieve your financial freedom. Okay, thank you so much for listening. This is Siwen Yi from the Yi Real Estate Network. Have a nice day. Goodbye.